I've been very reluctant to actually make this video because I feel like every single time I see a video like this or a thread like this, it's usually from people who have zero understanding of what they're talking about and usually have ulterior motives or a sneaky little ref link in there. So what I want to do is flip that completely on its head, take you through everything I've learned from investing in this space since 2017 up until now, from starting with 3 figures to over 7 figures, losing a lot of it, making a lot of it back, and then what the common themes and the blueprint is that I have applied over the years. So where did I start? So I started in 2017 with probably $300 invested, roughly around that amount. Bought XIP, proceeded to go up, and then proceeded to get absolutely wrecked in the 2017-2018 cycle. Thought I was a genius, as people do when they first come into the space. Know absolutely nothing, got my ass handed to me almost immediately. The idea was to then stick around, figure out what the hell was going on, and kind of dig myself out of this hole, despite being completely broke as hell, and then even more broke as hell because I'd used my university student loan to actually invest in it. So yeah, I really had no choice, really. Usually this is what I classify as this first stage. You're totally useless, you know nothing, you're following people online that the algorithm shows you immediately, and you don't even know where to start. You're just throwing darts. Everyone starts there. Don't worry about it. If you see some similarities, don't worry. There's you can exit this kind of phase very, very quickly. So where did I go next? Managed to kind of like study hard and learn to curate a better Twitter list based on, are these people profitable? Are their calls and what they're putting on the timeline correct? Are they consistently correct? Are they consistently early? And then start to weed out the stuff where you were buying purely based on larger accounts, shilling shit, and proceed and get the ass handed to you, right? So I started listening to every single podcast and video I could, trying everything out that I could get my hands on, beginning to try and think of my own ideas, which is really, really important. I don't think you can borrow conviction. Borrowing conviction, you don't know why you're entering, and you definitely don't know why you're exiting. So that's something you need to be very, very aware of. Yes, use people to kind of bounce ideas off or initially get a rough idea of where you should be looking, but you need to be able to craft your own thesis when you're investing. So got relatively lucky. I'm going to get into luck later in the video, but got relatively lucky in late 2018, early 2019, as very early murmurings of DeFi summer were coming online. Chainlink was around, I think it was like sub $2, but let's put it that way. Probably even, I think it might have even been sub $1. So super, super early on that. The idea was it's the infrastructure that's going to bring the off-chain on-chain. And that was like really, really simple for even me to understand, who had zero understanding of what the hell was going on. I thought I did, I didn't. It's one of those things, the more that you do understand, the more that you realize you have zero understanding of what's actually going on. This is kind of like a common phase where this stage is to learn as much as possible. You immerse yourself in the industry. That doesn't necessarily mean you have to work in it, but you're constantly scrolling, constantly watching, constantly trying to learn, constantly going out your way. Try and learn as much from a technical perspective as physically possible, from a fundamentals perspective, and you're probably starting to dabble in some TA. Maybe you did Creds TA course, which is still completely goated, and recommend that to anyone. So once you get to a certain level, there is not that much more to learn when it comes to technicals of it, to be completely honest. Like purely from a token perspective, there's only a certain amount of ways you can move the pieces around the board. I will say that I don't think this stage comes just yet. This comes much, much later, where you see something and it's like, oh, that looks similar to that, and you're probably most likely right. A lot of yield looks like that. Once you see one fundamental thing, it's like you can start to have this like really good understanding of how it might play out. So that can give you an understanding if you want to get involved or if you've seen this game before. So what you typically do is over-index for fundamentals. So you start to kind of mid-curve everything, and you start to have strong enough understanding of stuff where you feel like you're going to be right, but then you don't factor in the irrationality of the market. So you tend to be right more than you make money at this stage. So for me personally, the timeline of where I was at, purely like made around 20K, pure dumb luck. As I say, buying Link early with everything that I had and riding that up. I think that went up to like $50. Did well. Obviously started trading in and out of certain positions during that time as well. Early to DeFi summer, early to BSC season. But still, I just didn't really have a clue what I was doing, to be completely honest. And then Blockmates get started very, very, very late 2019 on the premise that, well, DeFi is this new emerging sector. If I really throw everything that I've got at it, I can potentially be like a subject matter expert in this field because it's so young. COVID comes around and get completely wrecked in the market. So that was like a really valuable lesson, I think. So it stung way harder than the 2017 one, but you need to be able to feel that pain as well. So you're starting to kind of get that touching the stove moment. Right, definitely won't do that again. Well, at least with not as much force, right? Next stage is I am going to go through what it takes to go from 3 figures to 4 figures, 4 to 5, 5 to 6, 6 to 7, and more importantly, keep it. We're now in 2020, 2021 too. You've got to recognize that you are an idiot and you've got to embrace it. The majority of the world is too. And what you don't want to do is get stuck here, because this is the eternal pit of doom where people prefer to be right than to make money. And you're much more profitable if you sat here. Very few people make it here. I'm certainly not here. But I do understand that I'm dumb enough to buy and smart enough to sell, right? The third stage of the typical crypto investor's progression, sat next to how my timeline progressed, is you begin to recognize you're an idiot and you start to shift to making money over being right. So you recognize you should never become a community member, because those initial wins have probably put you in this weird state of getting overly attached to that specific token project, and you end up buying and drinking the Kool-Aid, and you feel like you've built a lot of strong connections around that specific token because primarily it's taking you from a low amount of money in the portfolio to a large amount. Forget it, right? We're going to get into this in a sec, but it's such a common thing. It's such a common recurring theme. You recognize you're here to make money by being correct about what others will value tokens before they recognize it. The Keynesian beauty contest is the game for the most part. Now, it's not just that, but it kind of is, right? And I'm going to get into what this means in a sec. 2020, obviously everyone's in the homes, and there's a large liquidity injection to kind of give stimulus to the economy. And then things turned into easy mode, and you're going to hear me speak about easy mode and hard mode a lot, right? Easy mode, liquidity coming into the system. Hard mode, liquidity moving out of the system, right? And it's knowing how to play each. So for me, it was making good money around this time, probably first tapping into the first 6 figures. Made it all back after that loss from the March crash. Still recognizing that, well, probably not recognizing that I'm spread way too thin. So overly diversified on the way up, which is never a good strategy. Again, I'm going to double click into all of this. Early to DeFi, riding that wave, trying a lot of stuff out early, trying to be as early as physically possible, whatever that meant then, because everything was early. And then tending, which was a recurring theme for a long time, and I've only kind of just figured out how to fix this. Giving way too much back on the downside. So I do have a strategy to kind of prevent this from happening. It's worked a treat for the past 2, maybe 3 years. I'll get into this as we're going into the 6 and 7 figures section. You've got to be open to buying stuff that you don't like. You've got to think you can continue to. You can't think you can continue to trade your way out of a bad market. The problem a lot of people have is they tend to think the same behavior that got them to portfolio all-time highs is the same behavior that allows them to keep it, and it's not. It's basically the opposite. At this stage, you're given life-changing money back, and that stung. All right. If anyone's watching this and has been through that, it's the first time you go through that where it's just like, this could have changed my life, and you give it back. You're like, it's not a good feeling. It's horrendous, to be completely honest, and you do question a lot of things. And what I will say, if you are feeling that whilst you're watching this, is there's always more opportunities to make more. Again, I'm going to double click into all of this. What actually happened during that time? Portfolio probably topped at around 350k, with no additional money in from that initial investment. Early to the Avalanche rotation, early to Wonderland Spell and Time, Glory Days. Lost it all in a Trezor wallet issue, 25th word seed issue, which I still to this day believe was a hardware issue. Had around 30k left. Some people actually gave me some money, which is like amazing from them, and I'll be ever indebted to them for that. And then ran it back to all-time highs somehow at the end of the cycle, which I don't know. You just get tunnel vision at that point, and managed to make it back, which was nuts, but a lot of time and effort, and probably learnt more in that period than any other period in this cycle, you know. So again, I'm going to get into what this phase looked like and the lessons that I'd learned through that. So then comes the inevitable bear market, FTX, USDC, DPEG, UST, and Luna. Basically, what I've just said you're not supposed to do, I did. So I tried to outtrade and overtrade a bad market. It's like the you can't outtrain a bad diet like situation, right? Just don't fight the liquidity. Recognize what market you're in. Sometimes no position's a good position. Slowly towards the end of that, there were a few good players, and what you'll kind of come to gather from when we go through the different stages of portfolio hell. I like to be early to narratives and like to kind of forecast trends on the horizon by upcoming catalysts and then position accordingly. So there were a good few LST trades leading into the merge, and there were, I suppose, like the early days of Telegram trading bots and what has now evolved into trading terminals was the likes of Unibot, Rollbit, and a few others. Still didn't do too well, to be honest, despite a couple of big wins. Gave probably about 80% back. So don't feel bad if you've been in that position. It happens to everyone. So a lot of kicks in the teeth, a lot of messing up, a lot of continue to do the same patterns of bad behavior. Yeah, I suppose that brings us up until the last 2 years, really, where you really need to have like a long sit down with yourself and humble yourself and learn yourself more than the markets. I always think you're never going to be able to control what happens in the markets. There's way too many factors that are completely out of your control, and you've got to take this stoic approach of you can only look after yourself. So if you recognize you have patterns of bad behavior when it comes to continue to trade in bad markets, then you've got to do stuff about it, right? And I recognize that, and I do have a strategy to prevent that from happening, but that only comes with understanding your own behavior and not what's happening in the market. So around middle of 2023, towards the end, I was panicking, to be honest, because I was overexposed to the industry from a portfolio perspective and from a career perspective. I'd left everything, should have went in to do cancer research, PhD, deferred that, try to build a media and research hub within the crypto space that's just completely been blown up. That looked like it was going to get regulated out of existence. So I'm like in a very precarious situation. But what I'll always say, and you'll see the recurring themes throughout this, are stay curious, keep your head in the game. If you have a long-term thesis on how something will play out, the rest is just kind of noise. So I allocated heavily to Solana because there was way too much grave dancing for how good of a product it actually was. So you can't just rely on other people's opinions. You have to go and have a look. I'd used Solana an awful lot in the previous cycle, pretty well. Had like nailed that run up, probably from like $4 or $5 all the way up to all-time highs. And then with the remaining amount of money that I had left after I'd been overtrading and give way too much back, I then just said, I need to concentrate on the business. I need to concentrate on better media, better research, and expanding blockmates. So what I'm going to do in the meantime is I'm going to just whack everything that I've got left into Solana. Coming up. Don't tell my wife that one. That was around anywhere from $10 to $12 to $15 scheduled buys. There's a million tweets on timeline that I've brought up doing victory laps to kind of timestamp that as well. So, and I knew the ecosystem. I knew the builders were still active despite kind of branded like FTX chain and all that kind of shit. So I could just happily sit on that at that really, really low cost basis. And obviously everyone knows how that one played out. So at that point, it was being patient. It's better to figure out you need to be patient earlier in the beginnings of a bad market. I knew the ecosystem. I wasn't rotating into any ecosystem players because I knew alts were getting decimated and wanted to hold something, I suppose, long term to kind of capture that upside. And yeah, this kind of phase was, I suppose it was a contrarian bet at the time, which is weird to kind of think of now. But the only reason I knew that is because I tried it. Understanding something before the rest of the market does is the way that real money's made. During this time, like, as I say, you need to, I've mentioned understanding yourself more than the markets, learn your strengths, learn your weaknesses. So I feel like I can outperform most on a really frothy good easy mode market. I feel like I'm very good at spotting trends early and riding those and sizing them correctly. I also recognize that I can tend to give away too much back on the downside. So you got to kind of structure your strategy around that. I think at this time you start to get really used to smashing the sell button, which is good. And you start to reduce the emotional attachment to any of the positions. And then you also start to be honest with yourself and recognize if you are actually early or if you just want to be involved and you want to be on the party bus. So during that time, as I say, I was left with around 50k from the drawdown from FTX and stuff like that. Just smashed all that into Solana once I'd realized that I can't outtrade a bad market. As I say, early on Solana, concentrated everything into Sol. And then the murmurs of late 2023 started to happen when people had recognized, oh, Solana might actually still have some developer activity, and went quite heavy with some of the Sol position into Bonk, probably around 20 million. And that's at like 2 billion or something now. Obviously, I haven't kept it, but the idea, which I've always stuck to, is try and outperform the core holding of the portfolio with something that acts as beta to it and is reflective of that asset. So again, I'm going to double click on all of this. Meme season hit. I hit it hard and early, which was, I think a lot of people were so late to this because they couldn't actually comprehend that the meme sector was where people wanted to actually play in. And I think not mid-curving that and understanding that I should buy stuff that I don't personally see any value in, but I appreciate that a lot of other people will. During that time towards when meme season got too frothy, recognizing that I can't physically live with myself handing back another 80%. I just took 85% off. That's invested outside of crypto now. That's in stuff that is actually you can touch with your hands. So I don't have that on the table in crypto anymore. And what that allowed me to do is then keep 15% on the table. And effectively, can you remember when you were a kid and you'd played Pokemon and you'd basically got all the gym badges and you'd like level 99 all your valuable Pokemon, and just like, what? Starting a new save give you a bit of a purpose and kind of a bit of a challenge to actually go and do it again. And that's the way that's a framework that I kind of like to use. Once I'm like confident, or probably overly confident if I'm completely honest, that's when I like to have this huge haircut and take it all off, get it out of the industry and go and invest it in whatever, property or put it in the bank or whatever you want to do with it. Something that's completely uncorrelated to this industry and has no reflective risk of it. And then with the, I suppose, 15% that I had left from the portfolio all-time highs, seen a little thing called GOAT and Truth Terminal, and then went really heavy on that at around 30 million. Probably the greatest trade I've ever done was finding Farcoin at 900k, scanned that in Blockmate's Discord. I think we made some quite happy meal deal subscribers off the back of that. And yeah, there was a couple of other trades around that, kind of like early AI meta with Griffin and a few others. Had really, really good trades on Peanut and a few of those others that got listed on the tier 1 exchanges, and just like sized heavy into those. Again, just cashed it out, start again. And now we're here. I'm probably 2x, maybe 2.5x off from where I started beginning of the year. Makes me just be able to sleep easy, makes me be able to think clearly. I don't romanticize around this 10,000x trade that is like a lottery ticket, if I'm completely honest. And yeah, I've also got other commitments. I've got a lot of stuff that happens outside of this industry and a lot of stuff that I have to, like a really quickly growing business with a big team that need my attention as well. So distractions, like markets, are obviously great, and it's what I love doing more than anything else, I think. And yeah, but I have to recognize that there is the trade-off between your lifestyle, your mental health, and your positioning in the markets, particularly when you've got a lot of stuff going on as well. So that's that. Now we're going to go through the portfolio stages of crypto hell. Right, and how I would think about them if I was starting from 3 figures, 4 figures, 5, 6, And then at 7, fortunately, I can't comment on 8 figures just yet, but we will get there. 3 to 4 figures, as I say, you kind of like in this left curve phase. You might be smart in other fields, but you have zero understanding of what's actually going on in this space. And it is such a weird space with its own weird etiquettes. Where I would start initially would be basically asking yourself what your refill rate is. If you had $100 and this is what you wanted to put in, and how fast can you get that back if you were to zero it over a weekend? All right, can you make that back relatively quickly? Is it going to take you a little bit longer to actually make that money back? Define the refill rate is what I'm going to call it. And then that is your risk budget, because at this stage, you should just be swinging for the fences, depending on what your refill rate is, right? You want to get out of 3-figure hell as quickly as possible. And the way that you can do that, you can buy anything, right? The sizing of a 3-figure position, you can buy basically anything. And if you can make that back by hobby, freelancing, your job, extra hours, then I know that I'm not going to say this is financial advice, but this was my idea. I feel like I could do some extra shifts and made that initial investment back if it went to shit. So to find that refill rate is important. Fix your information diet. The problem is you don't know what you don't know. So you need to follow high signal accounts. And the only way that you're going to recognize what high signal accounts are is spending a lot of time on the timeline scrolling. Find strong signal accounts on stuff like Kite or leaderboards. You can use all of the Blockmate's free research. It's free. It lives on the site. Just go and use it. There's over 1,500 articles on there. There's probably 800, 900 videos across the YouTube and Twitter. Like, just go and use it. The resources are there for you to actually go and do that from people who actually know what they're talking about. Blockmate's Discord's free. This isn't supposed to be a sales pitch, but this is literally what we made all this stuff for. And if you do get burnt by someone's stupid calls, yes, people can get stuff wrong. I get stuff wrong all the time. But I will admit it, whereas a lot of people will kind of make out that every 100% of their trades are accurate and there aren't no nefarious activities going on under the hood. So yeah, recognize when you're being farmed effectively. Something that I wish I did a little bit more of in the early days was networking. I kind of just built my own community as opposed to kind of going to speak to everyone, which was a mistake. So like learn from that. Join active Discords and Telegrams. DM people. Just be annoying until they give you the time of day. Copy them, but don't blame them if you lose. You're the one who makes the money and loses the money. Remember that. So, and then you've got to kind of like find the signal and filter the noise. And if you're unsure about something or someone, you can always DM me. I will be very, very slow to respond. I just will point that out. You'll probably have heard of airdrops. I prefer at this stage 3 and 4 figures that you do not play TVL based airdrops. So that means an airdrop where you rack up points based on how much liquidity or capital you commit to a protocol. At this stage, you do not want to do that. You're removing too many of your chips out of circulation. And there are bigger wallets that are going to farm it way better and way harder than you. And you're much better inclined to actually do the airdrops that require a little bit more effort. So if you don't have a lot of capital, you best have a lot of time is the only way, or best be willing to put the time and effort in. So that I'd kind of like say this is like a grind drop versus a TVL drop. Those aren't terms. I just made those up. But anything you can put time and effort and resource into as opposed to TVL at this stage is a better move in my opinion, because you don't want to miss opportunities in the markets because you're tied up in a protocol with TVL. You can track them on ICO drops, CryptoRank, and a few of those sites. Again, skip TVL based airdrops. Grind based, so like low capital requirements, so you can keep your chips in case opportunities arise in the liquid markets. And I'd only chase the ones that you'd actually use, that you see value in, or they've had large raises, are leaning towards community first, and then you can kind of check the distribution pie chart. So if there's going to be a large allocation for the community, then obviously there's more wealth to go around. But best to define all of that before you start putting in a lot of effort, because what tends to happen is You got a lot of people that just like to airdrop farm absolutely everything and then get annoyed that they spent a lot of time and attention, sometimes some capital, and don't get what they feel like they should be rewarded with. At the end of the day, it's free money, right? So you'll see this recurring theme is concentrate, don't diversify. At this stage, through three figures, you should be holding 1-2 players max. This is your first taste at sizing stuff correctly. And you should be focusing on early trends, research over sprint pray. Do not be holding any more positions than 2 positions. You shouldn't even be holding 2, if I'm completely honest. You should be buying 1 that you have 100% conviction on. Get on chain. You should not be on centralized exchanges. They are the devil. And if it's on a centralized exchange at this point, previous cycles, it was still okay to buy on centralized exchanges. But if you're on a centralized exchange at this point and expecting to get outsized returns, I'm sorry, but that's just not where it's at. The next stage, so you've gone from 3 to 4 figures. Let's say we're now at 4 to 5. A couple of early wins, particularly in a liquidity flush environment, does not equal a system or a strategy, right? You can convince yourself it does, but it isn't. Sometimes you're just hitting and hoping, and that's fine. But the more wins and the more losses that you have, you start to then have this kind of subconscious understanding of what's working and what's not, and why it's working and why it isn't. Brownie points if you can start journaling and writing that down, because then you'll actually objectively see what's working and what isn't, and you kind of take a lot of emotion out of it whilst you're doing that as well. So now you need structure. Why did you win? Why did you lose? Do you have a habit of clicking buttons like I do? Because I'm probably a little bit addicted to it, if I'm being brutally honest. If you do understand that, like I do, then recognize how you craft a strategy around to prevent getting damaged by your own behavior, right? So be honest with yourself. Like if you can't be honest with yourself, then who can you be honest with? So think about the market in modes. So I've mentioned this in the middle of the episode. So easy mode, press hard, and press fast. Hard mode is preserve time, right? So think about like that strategy. I'm going to go into the new save strategy a little bit later, but if you're in an easy mode market where there's liquidity and fresh liquidity coming into the system, strong narratives, try and be as early as physically possible. Try go hard on it. And then once stuff becomes choppy and you recognize that this is a hard market, liquidity is leaving the system, and not a lot of stuff is going up, good announcements, Bitcoin's looking pretty weak, the majors are looking weak, good announcements are met by bad price action, recognize what mode we are in, and then hit the preserve button, which would be either take 100% off or take 80% off. And then if you do have to continue to click buttons, which isn't a bad thing, because you keep your head in the game and you keep at least some incentivized motivation to be in the market, just play with fewer chips. And that's a hard discipline to learn, but the quicker you can learn it, the more profitable you're going to be over time. So again, don't outtrade a bad market, outtrain a bad diet. That's a similar analogy that I'm using here. Stay small in bad markets, keep bets light, stay curious. This is a never-ending game, and learn to accept that. So people think that you're going to hit this 10,000x trade and you're going to sail off into the distance and you're going to buy everything you ever wanted. That is just categorically never going to happen. I've never heard of one person who is consistently profitable in this space be able to repeat that. Usually when people do hit those large wins, it's met by extremely large losses. I know people who've went up to relatively high, mid to high 8 figures and give it all back, right? Because there was no strategy around it. Initially, they put strategy and luck in the same bracket and didn't recognize which one was which. So what you need to do is watch what holds during dumps during this time. And if you do feel like there might be a turn of the tide on the horizon, like this might be a bad market or a choppy market, but the backdrop of a lot of announcements from a macro perspective and from a fundamental perspective are quite positive, then you need to be having a look at relative strength across assets, like what is holding, what is actually maybe trending up on a lower time frame, and then start thinking about, am I happy to buy this at this price, and how much of the portfolio I'm willing to put into it. And you might even just go with that 10 or 20% that I've mentioned, where If it gets smashed 30% to the downside, then you don't necessarily give a shit because you can size in or ladder in as it goes further down. Because if you are buying something from a fundamental perspective, yes, you need to be able to size in at the desired price where you think that's acceptable. So you got to look for asymmetry early, and by that I mean finding narratives before they pump, pre-positioning into liquid plays around a specific narrative. So if there is a catalyst on the horizon where, I don't know, like just something off the top of my head, the Genius bill obviously is a huge global macro catalyst for stable coins. You need to be in that kind of betting that was going to pass, and try and bet on tokens that were going to reflect and be positively impacted from that, right? So all that to say, there wasn't really much that you could trade to express that interest. You might have been able to buy Aave, you might have been able to buy something related to stable swaps. That is a dynamic in and of itself of, I see a catalyst coming, this should affect this specific sector, but there aren't any real good ways to bet on that, like, or kind of like express your interest in that market. So I think it's kind of happening with robotics now. There aren't a hell of a lot of good players to invest in, and if they are happening, they're probably happening in the private markets. But again, as long as people know that's on the horizon and there might be specific catalysts that are upcoming, like a huge unlock might drop from one of the large robotics teams or one of the large AI players in the space that enables XYZ, that would usually result in something catching a bid that's in the robotic space that can be somewhat tangential to that specific narrative. And it's positioning early enough where you can see there's a little bit of interest. You want to see a little bit of volume spike and you want to see a bit of upward momentum with a token, but not to the point of like you're waiting for the announcement to drop before you actually allocate it towards it, because usually at that point it's particularly a sell the news event. So, but that's the keys to the kingdom. That's the tricks of the trade. So spot upcoming catalyst, figure out which sector or tokens would particularly benefit from this, allocate accordingly. If catalyst doesn't result in anything meaningful, cut, move on. So what I would say is, again, this 4 to 5 figure stage is stay connected, talk to people daily. You need to be in groups. You just need to be. If you want to join Blockmates, it's for free. Just jump in. We don't want anything. Digest the right information. Again, you've really got to understand what you're digesting. This is why I said I didn't want to make this video, because a lot of this style of video on YouTube is made by absolute idiots. Recognize how to spot that. Usually you will spot that by people having zero self-awareness and making out that their shit doesn't stink and making out that they've never had a losing trade in their life, right? You're never going to get this from this channel, because this is completely laid bare, 100% raw. I will tell you all the wins and all the losers, because I just don't think it benefits anyone to kind of like doll it up in any other way. So, right. So at this point, you're starting to build your framework. What interests you? Very, very good if you're strongly interested in a sector really early, and there is upside to be had there. Like, and you're just kind of like intrinsically motivated by the understanding and curiosity of a sector, kind of like what's happening in the AI space with me now, and has been, which is I managed to catch a lot of that sector early. You can't really predict that. You just got to be curious at all times, I suppose. So if you have took that early 3 figures to now we're starting to look like 5 figures, are you still in the same position? And the question you've got to ask yourself is, if you were to sell the position tomorrow, would you rebuy it the day after with the same size? And why? If no, you need to be selling that, right? Because it's a reframing of something, and maybe even try it. If you're at 5 figures, you could probably sell the majority of positions and be able to buy it back without losing many assets in the meantime. So, and then kind of like assessing, am I holding this because I've got this first girlfriend syndrome thing with it, where it's all you've ever known. I'm just rephrasing it like that. Because people get really emotionally attached to the positions that take them from one step change to another in the portfolio. And you've got to kind of like knock that shit on the head. All right. Those are some really, really basic frameworks and tools to get you from the 3-figure hell to potentially 5-figure hell. So from 5 to 6, it gets a little bit different, right? So once you've got in this 5-figure range and you want to start getting to the first 100K, this is a good stage. I think this is like a really nice stage because you can get into stuff, you can exit stuff, you can, you're starting to understand how things work, right? So, but this is also where a lot of people give it all back, which is quite difficult. So understand that this is a smash and grab, right? Depending on where we are in the cycle, this is a huge macro trend with lots of tiny intra cycles on a much wider, larger cycle. And by that, I mean you get certain windows of opportunity to smash and grab the market. So you need to recognize if you're in that phase of a market, and you also need to recognize what the fastest horses are, and you need to be allocating to them as early as physically possible. And this is the way you're going to compound. So you're going to compound. If you have one full cycle, there's going to be lots of mini cycles, which probably are sector dependent. And if you can really nail early cycle rotations, whilst there's still a lot left of the wider cycle, that is the key. What a lot of people do, for better or worse, is they tend to overly diversify earlier in the cycle, which spreads them too thin, then doesn't allow them to have a larger capital allocation for later in the cycle when they should be really thinking about taking stuff off. But they usually then start thinking, well, I'm getting pretty good at this, I'm going to start sizing heavier, but then you get into like end times and it doesn't really work. You should be going as heavy as early as physically possible. Much easier said than done, but you need to recognize that the longer like the wider cycle goes on, the shorter these opportunity windows should be, and you should be recognizing that. Again, I really don't think you have the luxury of this 4-year cycles anymore, and you need to predict, and you need to understand this, and you need to think of this as like these opportunity windows as like raids. So again, where are we in the cycle? Is liquidity coming or leaving? Do not fight liquidity leaving the system. Again, that's got me fucked after 2020, 2021. I thought I could outtrade liquidity leaving the system. That's just like categorically very, very difficult. If liquidity is exiting, stop pressing or reduce the amount you're clicking with. Don't fight liquidity, blah, blah, blah. You want to have chips on the side to be able to allocate heavy when the time is right. And if you got to this point, you're probably going to be able to recognize when the time is right. You might be off by even a few months, but usually around that time of consolidation to the downside where stuff's dropped 80%, it doesn't necessarily matter where you're buying, to be honest. Like, you're still going to capture a lot of upside if you were right in the assets that you were buying. So people get rich in a bull market, people get very wealthy in a bear market. Reiterate to yourself, you're going to have to accept that the shit that you don't see any value in will probably outperform. The stuff that gives you a very visceral reaction, for better or worse, is worth paying attention to. And learn my lesson from the bored apes that I thought were the stupidest thing ever, and then proceeded to watch them completely rip, the mutants rip, and then the land rip, and then the token airdrop. So don't do that, even if you think it's stupid. You're here to make money, not to be right. Okay, so put your pre-assumptions aside. Constantly reassessing the portfolio. Are the assets that you're holding in? And by in, I mean, is it still a sector that has a lot of upside left in it? Who is the marginal buyer for those assets? Or are you going to be sat in assets that have probably got a 20, 30% area of volatility to the upside or downside, where you're just holding them and you've just got opportunity cost because there's other shit ripping, right? And you're too stubborn to sell them because you've got some form of attachment to it. So this is something that everyone should do if you're investing from a purely fundamental perspective and not just like momentum trade. If you think that there is upcoming catalysts and potentially a sentiment shift and you feel like you've spotted a token that could benefit and be the fastest horse in relation to that, ask yourself how it goes to zero and how is this thesis invalidated and what are the early warning signs, right? The hardest one to predict is founder risk. Can the founder be really good for marketing because they can't shut their mouth? That is a double-edged sword. So also be very, very aware of that. There's usually no smoke without fire. So just always be questioning. Listen to other people's opposite opinions, and you should be able to be in groups at this point where, and you should be mature enough to also listen to conflicting opinions on your position as well. I think it's really valuable. There's been plenty of times where you can't see the wood for the trees. Maybe you've already hit a 10x on it and you think it's the best thing since sliced bread, and then someone hits you with like an objective fact that is categorically undeniable and you just still cannot see it because you've got these beer goggles on. Always be asking like where this goes wrong and how does this go to zero, because you need that balance. There's those checks and balances. And are those like negative effects on it short term, or are they going to be long term? So uncorrelated trends, is there a new sector emerging that your current positions that you're up a considerable amount in now are not going to be affected by? So like memes and AI, yes, there was a bit of crossover, but have you made enough to be able to compound into it? Compounding and rotating is very, very difficult. But if you're going to do it, in my opinion, it's good to do it hard and good to do it early. There's no point just like flirting around with it, because it gets to that point where I was saying earlier, within a token's, I suppose, price appreciation cycle, you ideally want to be going hard as early as possible and not just dabbling early, because you'll always be like, what will happen is, let's say you held a load of memes and they'd gone up like 100x and you've took the portfolio from like a couple $100 to maybe like early six figures. And then you see like a bubbling AI sector that's just kind of coming online. Maybe a couple of tokens have done 3, 4, 5x. What you don't want to do is take like 10% and then smash it into that, because what you're going to do there is you're going to have this price anchoring and this price bias. Oh, well, I seen these tokens at 3 million market cap when I first initially bought, and I can't really bring myself to buy them now they're at 10. Meanwhile, they can go on to do $1 billion. That there is nothing worse than that, right? I think that's arguably worse than round trip and everything, right? Get price anchoring and price unit buyers out of your head as quickly as possible. And the way that I typically do that is understand that I can just sell absolutely everything in my position and rotate early into a sector. And if it goes tits up, it doesn't matter. That's just what happens in the markets. You can see your original bags. It doesn't matter. It's part of the game. But what you will kick yourself for doing is buying and sizing the new rotation badly, and then having this price anchoring to the original price that you've seen, and physically can't bring yourself to be able to buy it, right? And again, at this stage, please just stay curious and try as much shit out as early as possible, because at this stage, you are really going to recognize what's good and what's bad. And you're going to probably, if you try stuff, you're doing more than 99% of people in the industry, which is doing more than 99% of people on the planet. So then you do stumble upon these opportunities where they are so asymmetric. It's like, it's 100x potential if you're trying stuff early and you're right and you size it correctly. So big boy leagues going to six to seven. There's a lot of similarities across this one, but it's a bit more difficult, right? Because the sizing becomes a lot harder. So you've got to kind of think about similar ways to express your bets in a way that you can still get the notional size and the notional upside that allow you to get in and out, right? So what got you from 5 to 6 potentially isn't going to get you to 7. If you've been trading like 10k market cap tokens and you've been flipping them for 100k and that's got you to a certain point, it's going to be very, very difficult to use that strategy throughout this whole process. So you need to be able to understand wider macro trends and wider industry trends to allow you to size larger into stuff to then capture the upside. So you still concentrate on bets, but you do also have different tranches of the portfolio where there might be relatively lower market caps. You're probably starting to think of things in how much of a percentage of the total supply you can hold, or the certain percentage of circulating supply you can hold. How much can I actually size into this, and how much can I actually size out of it? So, like, if you think about a framework of, you've invested 30k in something market cap, so you're owning 1% of the supply. If it runs to 300 million, you've got a return of 900k. Definitely doable. Very hard, but definitely doable. Easier said than done, but again, majority of my wins have came from stuff where I've been able to pick up a large portion of the supply, sub 50 million, and they've had the potential to go on to do hundreds of millions or into the billions. So choose your leverage strategy wisely. So I personally never go above 2-3x leverage, and I only use that for swing momentum trades with majors, right? So I'd argue alts have intrinsic leverage anyway, so you don't necessarily need to be messing around, particularly if anything's less than, I don't know, a couple hundred million market cap. Low caps just treat them as intrinsic leverage, and only start fucking around with this stuff if you really don't understand what you're doing. It's the fastest way to go broke, right? It should be a way that you can allocate less capital to a trade as opposed to being able to allocate more. So I kind of just like think about that one in a sec. Yeah, like at this stage, you know what you're good at and you know what you're bad at. So, like, using me as an example, I'm shit during choppy markets, so I just de-risk. It's hard because you get really, really tempted, but I de-risk and take it off the table, so it's out of sight and out of mind. Put the ego aside, recognize that you can have a portfolio that you're going to trade, but that is considerably less than what your portfolio all-time high is. It's not really, because the rest of it's in the bank. So, yeah, it's actual real money, you know. If you thrive in early trends, go hard, go early, then taper, take off, start again with a lower amount, compound from there. Accept the ego death when you're wrong. Like, it's fine. You should be wrong quite a bit. It's just when you're right, you should be really right. Don't let it kind of like eat you up when you're fucked up as well. It's like, move past it, move on, recognize what you did wrong, try not to replicate it again. And if it's out of your control when it's gone wrong, fuck it. You can't help it. It just is what it is. You don't always need to have a position. Don't force a trade because you're bored. Opportunity is constant. Your capital isn't. No position is not a bad position. Or no position is better than a bad position, should I say. And then again, adapt your strategy in bad markets. Now that you've got a bit of capital behind you, you can then start to look to allocate towards high ROI farming, whether that's like a new product or a new chain, based on the criteria that you think there might be a sizable airdrop compared to how much effort, time, and capital you can put in. Do you think it's going to be worth your while? Can you think about it as this opaque APR that you don't really know, but you can kind of work out? Spread trading, you want to take out all the external volatility of the market, kind of long one asset, short another, and then just the 2-horse race. Testing new frameworks with smaller stocks, so maybe you want to try and have a look at what sniping would look like, or you want to try having a look at what a trading script might look like. Or, I don't know, whatever it is, whatever kind of like floats your boat that you'd want to try, but in a rip-roaring market, you don't necessarily have the time, capacity, or energy to put into because your strategy is typically working. And trying out new tools. You've got to stay like ahead of what's on the market. And if there's thousands of other traders that are being early to using a new tool and you're not, and they're defining even like a couple of percentage points of edge, then yeah, you need to be able to have that downtime to actually try new shit out as well. I appreciate this is a lot. So these are just kind of like reiterations. A few kind of like key points across all these disciplines is, don't be chasing yield if you've got like a $2,000 portfolio or even $20,000 portfolio. This should be for like 7 figures. If you're chasing yield, you're going to be tied up in an asset that is generating yield, yes, but you're going to lose way too much opportunity in the market. So I posted these the other day and I was surprised at how many people it pissed off. So If you've got less than 2 to 3 million in crypto, you shouldn't be chasing yield. With the markets we've just entered, you're better off riding trends. You can get a better percentage gain in one nice swing without illiquidity, smart contract risk, and dilution risk. Then you can compound. Don't do it. It's a trap. And if you dare lock your tokens, you're an idiot. Also, holding over multiple cycles is a stupid strategy. If you understand how token distribution and token dynamics and unlocks play out, you could be buying a token that has still got a 20x dilution to happen on the market. I think it's a terrible strategy, if I'm honest. I'd much prefer to cash everything out when I feel like the time's right, play with a smaller amount of chips on the table, and then reallocate if I need to. I can only probably say there's 4 tokens in the full industry that I can see surviving over multiple cycles that are worth holding, and that would probably be BTC, ETH, Solana, and maybe Hype. So yes, there are going to be your dinosaurs like Cardano and XRP that just die, but the rest of this stuff over multiple cycles with, depending on distribution and unlock cycles, it's not worth it. It just really isn't. Go and have a look at the market cap charts on CoinGecko if you don't believe me. Like, a lot of people have been holding tokens for the past 2 cycles where there might have been 10% circulating supply when they bought, and now there's like 80% circulating supply, and they've been diluted to hell, and they don't even realize why their tokens are going to all-time highs. So yeah, finally, just to round off, stay curious, admit when you're wrong. Once you've sold a good trade, leave it, move on. You have this weird anchoring and Stockholm syndrome and tend to kind of like give a lot back when you do that. You should take a lot off the table, cash it out, and start again. That's my strategy. I recognize I'm bad in choppy markets. Sizing is everything. Windows of opportunity come around, be prepared, and when they do, still in the game, even when you are in no positions. Forget personal beliefs on a narrative. The market does not care. Recognize this for what it is. It's the greatest casino on the planet. 99% of tokens and the projects are scams. The scams tend to pump the hardest. Recognize when it's time to get off the gravy train. The remaining 0.01% are amazing companies and tokens. It's time to play both, and you kind of got to choose the right time to play in both of these areas. Recognize what is a trade and what's an investment. People get this muddled up all the time. A trade is 100% price sensitive. An investment should be fundamentally driven, and the invalidations of both should be reflective of why you've invested in them. No one things are getting frothy, so if just another 2x, telling your partner about your wins, screenshots, looking at houses, cash it out. Recognize that pattern of behavior. If you're doing it, there's thousands of others doing it as well. So stick around. This is a long game with lots of little games in between. Compound your capital, your knowledge, your network. And yeah, I think that's everything I've learned. There's probably some other bits and pieces, and if I've missed anything, let us know in the comments. Hope you enjoyed it. If it helps one person get from 3 to 7 figures, then it's been worthwhile actually putting all this together. If people want access to this sheet, I'll just leave me a comment in the YouTube comments, and I'll get it over to you. Next video is probably going to be like, where the hell do I even start? Research process, tools I use, how to use AI with research, which has been super, super, super effective recently. How to spot trends early and how to know when it's up. So I'll go through that next time. Please, if you had any value from this, it took a long time to write this and craft it, please just like and subscribe. I hate asking, and it's cringe, but it's the only way that people find this video. So please, please, please do it. It's all for free. And yeah, thanks for listening. That's a lot. My voice is getting painful now. So see you next week. Over and out.